with the latest on the corporate front, all the market trends, expert opinion, and sound business advice. It is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. After high-level talks in Geneva, China and the United States have announced a series of tariff adjustments between the world's two largest economies. The two sides will remove 91% of tariffs and suspend 24% for 90 days, while further talks continue. After the adjustment, both sides will retain a 10% baseline tariff, while the U.S. 20% fentanyl-linked levy imposed earlier this year will also remain. The two sides will establish a system to continue discussions about economic and trade relations. So what can we interpret the results from the Geneva meeting? How will the economic and trade relationship between China and the U.S. evolve? And what effect might that have on the global economy? For more on this, join us on the line now are Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation, Professor Qu Qiang from Minzu University of China, and also Yan Liang, Professor of Economics, Willamette University. So, Professor Qu Qiang, I will start with you. China and the United States announced a series of tariff adjustments after the high-level talks in Geneva. What can you tell us about the agreement between U.S. and China?
Well, I think this is a very important step, even though we're not fully optimistic about the future, because we still have another 90 days to talk to each other. And also, let's face it, the current actual tax ratio is still basically around 30%. Even though they're saying that in the American side they've been down to like 10%, but still you have to count it in that in March they've been imposing on China an extra fentanyl-related, tariff about 20%. So that added together is about 30%. And also a news that about the small packages under the value of $800 US. They used to charge us about 145% of the tariff. Now it's only be slashed by half. It's about still by 45%. So all this information are telling us, okay, America is trying to back off into a more reasonable zone towards a bilateral trade, but not fully removing all this, tariffs, because just 1 year ago at the same period of time, America's average tariff towards Chinese products is about 14%, and vice versa for China is also like 12% to 14%. So basically, it's much lower than today. So I think even though we're backing off from like 145%, but still there is a very, very long way to go to negotiate with each other. And also we've been hearing from Mr. Besentis. He made it very, very clearly that, and they do not want to decouple with China in a comprehensive way, but they would like to seek the full independence, quote unquote, on many key areas. So which means they're still going to have to, say goodbye to China in some, certain key area, but, maintain contact and trade on, the grocery level, like the Snickers, like t-shirt, like toys. Well, that's going to be fine. So I think this partnership still need to be tested in the next 3 months. And personally, I think they will realize the partnership between China and America is not, is not a slowing down for American economy, but a very reversely, it's been a boost for American economy. Actually, if you want to make America great again, you need to make China great again first. Because if you want to reintroduce manufacturing, especially in the key area, into the United States, most important capacity is in China. And with China's help and bonding with China, American people and American workers will get a better deal and a better job. But by blocking China and also break up, in the key areas, actually will slow down the whole process. Just take a look at the current process. I think all the evidence are pointing at the same direction. So I think after the 90 days, we're going to be better and better.
So Dr. Zhou Mi, so what factors do you think enable the two sides to make significant and substantive progress?
Well, we know that both sides are really important economies in the world. So we have so many international trade. So in the past, almost more than 1 month, we have seen that tariffs between our two countries increased so much. So the trade, I mean, all the stakeholders, including the exporters and also importers of both sides, decided to wait. I think it's really a good, important opportunities for both sides to reconsider about the impact of the tariffs. As we know, the tariffs is a very important cost when the supply chains are trying to fit itself. So both sides are really under the pressure that we have to consider about what can we do to do more to help those companies who are very important to support both sides, economy and enterprises and consumers. And on the other side, I would say that as China is one of the most important country in the multilateral system, we are so responsible for what we are now doing to other countries. So it is very important opportunities for us to try to give more support to other countries also. And if you are looking at, the past months, China and the United States have tried to do something to give some support to the exporters and importers. And some of the problems in the United States, like the inflations, are also under pressure. The first season of these years in the United States are seeing some of this decline of the economy, which is so rare in the past 3 years. So I would say all of these factors are, some of these ideas that we are trying to get some engagement in Geneva. But I think it's still a little bit surprising to most of the observers that we can reach such an important, de-escalation in just 2 days in Geneva meeting. So we decided to establish the mechanism, and it's a good start for us to discuss about the possibilities. Like if you are looking at all the trading partners of United States, they started to negotiate with the United States, and China is maybe it's not the last one, but it is one of the most important.
And Yan, so after the two sides announced the consensus, what about the businesses, the small and medium-sized enterprises or companies, those importers and exporters? They are going to, rush to store up their inventory, rush to talk to their earlier clients and try to ship as much as possible. But the cost of ships are going to be up, right? Because there are great demand. And meanwhile, you're also going to see the global companies. Are they going to invest or not invest? Are they going to think about a long-term change in supply chain, or they can rely on earlier practices? What does it mean for all the different stakeholders?
Well, I think for this major kind of rollback on tariffs, I do think that the U.S. importers are going to rush to reorder the inventories just for the Christmas season. This is a very busy time for the U.S. retailers, for the importers to get their inventory. So we know that some of the ships already came on after April 28th, when the big retailers talked to President Trump and knew ahead of time that they got some carved out, and so they have already started to order products. As we know that Walmart basically told the Chinese suppliers that they could start to ship their products now to the U.S. And now after this reset, I think more ships are going to come to the LA port, and I think they forecast the next jump of the shipments will arrive on May the 20th. So that said, I do think that the U.S. consumers and also the importers are still facing elevated tariff because the 30%, this 2025 is plus the previous, 2018's and other sort of sectoral based tariff, it still put the U.S.'s average effective tariff rate to China's exports to about 41%. So it is still quite a hefty cost that the U.S. importers would have to shoulder and eventually be passed on to the consumers. But I think in terms of the longer term, when you ask about whether or not businesses will now start to invest or not, I think there's still a lot of uncertainties just because we don't know what the negotiations will be like after the 90 days. I do think that there's still a lot of disagreements and a lot of structural tensions between the two countries, especially around the tech area, and we can talk about that. So I think, the negotiations would be a drawn out and bumpy process. So it really remains to be seen after 90 days, whether or not the tariff will continue to go down or it will be ratchet up again. Of course, not to the previous 145%, but it could be higher than the current level. So that is still a large uncertainty for businesses to take into account because investment takes time. So that kind of uncertainty will basically push the businesses to kind of buckle before the investment decisions to be made. And also other countries are in the negotiations process. So depending on, again, for their deadline, that would also in a way affect many of the global suppliers, whether or not they would continue to produce within China or adopt China Plus One or China's Plus N decisions when it comes to rearrange the supply chain. So I think the long story short is that there's still a lot of uncertainties when it comes to the longer term business planning, global supply chain arrangements, investments, reshore or not reshore. So I think, it still remains to be seen.
And Professor Qu Qiang, so these talks were followed by the world because the entire world has been affected by these tariffs and, the entire world has been affected by the trade relations between China and the United States. And according to the IMF, China and the U.S. account for 40% of the global GDP. So how important was the adjustment in, tariffs, and how important is the overall trade relationship between these two countries for the rest of the world?
Well, we have to understand this 40% is very, very important for the whole world economy, not only for these two countries, but for the rest of the world. Actually, ever since the 2001, when China joined the WTO, and especially after 2008, after we got the subprime crisis, actually the whole world economy has been driven up by these two engines, China and America plus together. So the low cost of capital plus the low cost of capacity of the manufacturing from China combined together has been contributing to almost 20 years fast growth of the whole world economy. I think all the world, every country are winners. Especially we've been seeing the emerging market has been booming up ever since that. A lot in America, South Asia, Mid-Asia even. Everybody are benefiting from this double engines growth model. So today, if these double engines trying to decouple with each other, or not the hardcore decouple, I mean just a partial decouple from each other, for example, in form of a tariff war, I think the whole world growth model will change. For example, the capital model, for example, the manufacturing and supply chain model will all be affected. We need to build a lot of redundant capacities in everywhere. For example, if you're seeing your product from China will be blocked in America with very high tariff, you're going to shift your capacity, exactly the same set of things into some other market. For example, like in Middle East, like in ASEAN nations, or like in Latin America. So basically, the whole market only needs like 100 products, and you are fully okay to build this capacity in China and then ship them to United States or some other country. And then you can build in ASEAN nations, another set of a factory to build another 100 products to, fulfill the market. So this is the idea of the whole globalization. But now you have to, abandon what you have in China and build exactly the same product assembly line in like ASEAN nations or Latin America. So we will have another extra supply for for the same 100, products. So the redundancy, the cost, the low efficiency will flood the whole world, and everybody will eventually, to buy, the cost from all of this, over investment. And beyond that, and I think all this tariff are generating a very bad example. That is, if you don't think you are taking the full benefit in the trade, and then you can just randomly punish your trade partner, because we know that trade, especially in the current modern era, is very, very equal. I have the money, you have the product. If I want to buy, I buy. If I don't want to buy, I don't buy. If you don't want to sell, you don't sell. If you want to sell, you sell. So nobody's putting a gun on your head to say, okay, you need to sell or I need to buy. Nothing like that. So the trade are very fair, very fair. But if you think, okay, I'm buying too much from you, so I need to punish you. So they've been violating the basic rule of the free market economy and also the globalization. So if they become an example for every economy on this earth, and then everybody will feel they're entitled to get back the money they paid in the trade, and whole foundation for free market or the world trade will collapse. And that is not something we need to see in the future.
So, yeah, what do you think about the current situation of global trade and the global supply chain?
Well, I think the current global economy is highly integrated, especially when it comes to the global supply chain. And of course, China occupies a very important, indispensable node in that global supply chain. China has the very mature industrial clusters of over 200 of these industrial clusters. And so I think it's very difficult, as the US has tried to sort of decouple from China. So now their strategy has become the so-called strategic decoupling. But I think, again, it will be very difficult because China is a very large market. China is also a very powerful manufacturer. So it would be very difficult to really sort of decouple from China, whatever supply chain you are thinking about. Now, I also think that I agree with Qu Qiang. I think, this sort of the US's on-off, very erratic rollout of tariffs to, over 150 countries in the world. I think it just shown that the US is not a reliable global trading partner. So what that means is that countries will pivot. They will form other trading partnership with other more reliable trading partners. And I think China would also kind of be very cautious, right? Even though right now there is a truce. But I think the US's behavior has clearly indicated that it is not a reliable trade partner. So that's why you're seeing, China is reaching out to Latin American countries. 3 heads of the state just came to Beijing, visit, and signed many trade deals and investment deals. And China is also working very closely with Asian partners. And so I think it's clear that the world trade is going to continue to go on. The global supply chain is going to continue to build and rebuild. But I think that the US's credibility has been undermined due to this very erratic trade policies. So I think it remains to be seen what the next step the US is going to take. But I think whatever the US does, the rest of the world is more prepared, and they will, like I said, manage their own trading system, managing their own trading structures, and form alternative trading partners. And so, the trade is going to continue to go on and would benefit those participate actively and, strategically and leave the United States behind.
And Dr. Zhou Mi, so China's exports rose 9.3% in yuan's term last month in April compared to a year ago, despite China's exports to the U.S. contracting. So what does this tell us about China's trade potential?
Well, I think that for the trade of China is really depending on all the factors related with the trade. First of all, the capacities of Chinese manufacturing, as Yan have mentioned, is very strong. And I think that they are very able to provide enough products to other markets' demand. And the second, I think, is depend on the demand of the markets. So if you're looking at the details of this trade data, it's not only about United States, but also so many other trading partners. They increase the trade with China. So the diversification of the markets are really giving a very strong proof that China's export and import abilities are so resilient. And the third one are also based on the possibilities of the logistics, about the information infrastructure, and also related mechanism like the agreement. So we know that the world is still there, the multilateral system is still there, and we are seeing that China has signed so many free trade agreements with our trade partners. So it supports all these things. And I mean, that is a real important factor to decide that China's trade with our trade partners can be very strong and very resilient. As we are seeing that it's not only about China and the United States. There are so many other countries want to catch up and to industrialize their economy. So they need more intermediate products. They need more consumption products, and that they can find from China. We are providing more kind of choices, including the traditional products and also so many new things. I believe these are what they need. And I think that is the reason why we're seeing that China's trade are still very strong and resilient. And I hope that it can even increase better in the future, I mean, from the structure to the quality, China is going to play are even more important in the global trading hub.
And let's take a look at a specific example. Qu Qiang, actually, China's export manufacturing hub in Yiwu, Zhejiang province, saw a 109% surge in exports of Christmas goods in the first quarter. And despite the U.S. tariff and trade threats, many Yiwu traders report minimum disruption to their businesses. So why has the impact on this export hub been so limited?
Well, you asked the right question because we did go to Yiwu. We have some team go to Yiwu to just ask them questions to see, 145% of the tariff looks very devastating. How are you holding on? Are you surviving? Well, the answer is very similar to what you have just mentioned. Well, I'm not saying that there's little impact, but they're saying we're surviving. The reason why for that is that number one, I think Chinese products actually have more bargain power than many people can expect. We've been talking to them, they say, okay, there are many products, even though there are little things like the groceries, like the toys, but it's very hard to find a substitute. A lot of people will think this is unbelievable. That is not the high-tech semiconductors or chips or the aviation engines. How can that be hard to replace? But that's the true story because, for example, like a lighter, if you want to buy the lighter with the same quality, with the same, range of the price, it's very, very hard to find. So for the reasonable importers in the United States, they will stay with their old supplier in EU. Similar stories are everywhere. So they think even you double the price, you still cannot find a similar match in some other market, like in Latin America, in India, in Africa. Basically, Chinese products are so efficient, so good quality, and so competitive in the price. So that importer from America would like to, take some share of this extra tariff, like 50-50 or even 40-60, together with the supplier in China. That's just one thing. You cannot find the replacement. And secondly is China still, they're telling me in EU, they can still optimize the value chain. For example, cut some, extra, circle in the supply chain so they can still reduce about 30% or 20% of the cost. And last but not least, China's, supply chain is already all over the world. This is not just happening now. It's already been happening like 10 or 15 years ago. It's like the low-end part of Chinese products has already been shifted into some other, more affordable regions. So that nation can become a transit, export port for Chinese product. For example, those regions are facing like 30% or 50% of the tariff. So it's still better than 100% or 145%. So that's the reason why they're saying you fine. So basically, we can still survive. Actual average cost in EU, if we're talking about 145% extreme scenario, under that kind of extreme tariff, EU's average products cost will be risen by like 30% to 45%. Survivable, but not very beneficial. But now when the deal comes back to 30% already, so I think EU will be totally fine. So nothing to worry about.
And this tells us the great potential of China's trade. So now that the U.S. and China have announced tariff reductions, how long will it take to get goods, moving fast again between the two countries?
I think that the markets, in some ways, have already priced in this kinds of tariff truce. It's just the magnitude, I think, was a pleasant surprise. I think prior to the Geneva talk, many of the market participants, from retailers to the stock market participants, have already expected that the tariff will go down because the U.S.'s economy would not be able to sustain the kinds of tariff, and the Trump would not be able to sustain the kinds of political basis resentment against this kind of high tariff. So I think the market has already priced in. So as I mentioned earlier, that Walmart has already ordered the renewal of supplies, and so we're likely to see that these ships will coming into the U.S. again, and with the Chinese products again. I think the question is whether or not it will come at the same scale as prior to this tariff. Even though the tariff is now lowered, it is still quite substantial. Even some of the producers in Yiwu and others may be able to still sustain the kind of costs and are still able and willing to ship their products to the U.S. But we also know that there are many other countries in the world that China does trade with. And so we're seeing, in April, for example, as you mentioned earlier, even though the export to the United States has gone down by 21%, the shipments, the exports to ASEAN countries actually have gone up by 20.8%. I think the point is that the Chinese producers have other markets that they could sell to. So if the U.S.'s tariff remain high, then chances are, yes, some of the products will come to the U.S., but others may find other markets to sell to. So I think, as the U.S. media basically hailed that the Christmas is saved. So I think, the shelves will not be as empty as otherwise would have been without this Geneva agreement. But still, I think, with the tariff uncertainties, I think there is still maybe not be able to reach the same kinds of scale as it used to be. But that said, I still wanted to emphasize the U.S. is still really demand on the global supply of products for its consumers. And China is still this very potent, very powerful producers. So even if there are all of these tariffs and there are all these trade distortions, I think it's very difficult to really change the two countries' sort of role and the positions in the global economy.
Well, we are speaking with Yan Liang, Professor of Economics, Willamette University, Professor Qu Qiang from Minzu University of China, and also Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation. And that's all the time we have for this edition of Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.